Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your Metals Market Weekend Edition video. And this is for Friday, the 18th of January, 2019. Now, before you leave me, I want you to understand I have a special offer on my morning video that only my subscribers see. I'm breaking it out in a different way. We're getting a lot of response to it. I want you to take a look at that at the end of this. The big news of the day that impacted gold, dropped it down there $12 today, silver down 18 cents, platinum down, palladium down, but copper up, is that China and the U.S. are making more headway in talking to each other. Yesterday, Treasury Secretary Mnuchin sort of let out something that, gee, maybe the U.S. should consider taking off tariffs. We now know that he said that because he already has had information for over 2 weeks that on the last meeting, China had made a proposal, from the sounds of it, where they want to take over a 5-6 year period and get the trade deficit down to zero with the U.S. Haven't heard too much on intellectual property. We know the presidents will say that's too long, but where there's smoke, there's some fire, and the stock market's on fire from it. Now, if we take a look at a monthly chart of gold, even though for the month it's down $1, basically unchanged. It's just hanging in here at that 18-month moving average of closes, and I will argue that this either becomes an important top or a base from the market to move up again from. Right now, you are caught between the lower Bollinger Band and the upper. And remember what Bollinger Bands are. They're an algorithm designed to keep the market trading within them 95% of the time. However, when you go sideways, it's literally impossible not to get over them for a bit or under them if the market's going to start a trend. You see that almost here, where you had a bit of narrowness and then you got under it. So that is not to be unexpected when eventually it makes its move. Has it moved? Well, very frankly, it's gone from 1365 to 1161 in a year and back into no man's land about halfway between that. When we look at the weekly area chart of closes, we're going to finish up roughly $9 lower for the week, but we haven't broken anything important on this weekly chart. The 18-week moving average of closes is all the way down at 1236, and it's jumping on average about $5 a week, as you can see. So I'm assuming it'll be in the 1240 or higher level next week, which should put it over this last break low. To me, that's important because I like patterns where you get higher highs, higher lows if you're going to have trends. Support coming into a zone where maybe you don't break that. Most important to me on this chart, on the weekly, not the daily, is that from the high of 1365 to the low of approximately 1161.40, I can do a Fibonacci count. And in that count, what we did is we made a 62% retracement. We came back, fought for a bit at the 38%, stalled very minor at the 50, but we're getting distribution up here at that part. That is a problem for those that want to be long-term bullish. What you'd like is this pattern broken. I would love to see the market get up and close over the highs right here of 1340 because you could throw that pattern out the window. Right now, the pattern is still live, and this is a resistance pattern. When I look at the weekly chart, bullish. Higher lows, higher highs, so this part of the chart is still looking pretty good. When we look at the 100-day average, that is the number that I'm thinking will see the first support if it can break down there. You know, I'm talking not resistance, support, and the reason is it's often a number that traders like to look at. The fact that it didn't offer any real resistance, it basically got up here, popped through it, and never looked back, tells me that on the way down it may want to check that. Doesn't mean I'm right, but that's what I would expect. And what I'm liking is that the 18-week average of closes, I'm so used to saying daily, is over now this number, the 200-week. That's a bullish crossover. So I like when the short-term average gets over a very long-term average. I think that is very supportive of the market in the long term. When we look at the Bollinger Band, while you had gotten over the black dashed band, remember only 5% of the time do you stay over or under it. And to get a trend going, if you're coming out of sideways action, you typically do that. Then you pull back in and consolidate often. Nothing's all the time. The word's often. So I'm looking for that to occur. And in momentum, it is still up. Remember, on the weekly charts, unlike the daily charts, I don't look for overbought, oversold, or embedded. What I look for is the momentum up or down on the weekly chart, and as I see it, it is still up. We then get to the gold-silver ratio, and we're in a correction. The market had gotten just recently as high as 86.58 down to 81.45, and now silver is losing to gold as the ratio's back to 83. But the longer-term resistance is right here at the 83.95 level, and I'm looking to see if the market respects that at all. When we come to the ETF GLD, it is very similar to the futures. The market, I wouldn't be surprised if the 100-day average gets hit, but let me tell you the problem here. If you get down to that number, unlike the futures, you will break a pattern, and you will end up in this pattern with lower highs, lower lows. Now, if we look at this week's low at 121.03, that must have been made just minutes ago because it wasn't there earlier, I could already argue you got the lower highs and a lower low, and you're online to challenge that number. Why? Look at the outside day down. Want to create a bear trap? Take out the high of an outside week, and you generally catch that area if it's been going sideways the wrong way, the wrong footed, and you get another pop in the market. We'll see if that happens. But right now, I'm expecting more correction than anything else. The gold miners have been doing a bit of a correction here. You can see what's going on right now, down for the week. What are they, 77 cents lower. Could be headed towards this 18-week average. Momentum is turned down here. The bias is up because you're over the 18-week average, and the trend is up. So a bit of divergence. Would not be surprised to see the market try to pull back a little bit. In the silver market, I welcome this type of correction because on this particular chart, you've gone from being over the upper Bollinger Band, how many weeks in a row? 1, 2, 3. Now, even though it's a weekly chart, my rule of thumb is that it is very, very rare to have each day stay over the Bollinger Band, because I count as a rule of thumb each one of the weeks, I said day again, but each one of the weeks over that takes away one of those 5 percentage points. So you came in this week 3 weeks in a row over it, which gave you, in my opinion, 2% chances staying over it this week. That does not mean the market has to always fall apart or anything like that. It means there's a better opportunity if you're trying to come in under a Bollinger Band. I still see long-term support at the 1473 level. I see momentum wavering as it tries to pull back, and you'd expect that with a decline of nearly 30 cents on the week. In the copper market, it's a flip-flop of all this. You had been under and challenging the lower Bollinger Band. You held it. You held it again this week. Then you get the rally this week coming up. What would you expect? I'm going to expect to see resistance, first resistance at the 18-week average of closes, and much tougher resistance back up at the 285 level, which is the 100-day average of 100-week average of closes. On these weeklies, it's different. And on the Bollinger Band top. That would be the hard resistance area, but the first one comes in here. Are you in a downtrend on this? Not any longer. You'd have to take out this week's low in order to flip-flop the pattern of higher lows, higher highs. In the platinum market, you are staying on the weekly chart bearish. Why? You've had the pattern of lower highs, lower lows. You're staying under that. The resistance, right where I said, the line in the sand on a chart to me is the 18, whatever it is, be it the 18-day, 18-month, or 18-week moving average of closes. And when a market drops, it often goes there and fights a battle. A market's down, it'll come up. Is it all the time? I'm going to repeat what I say to you always. I don't know anything that works all the time, but you play the percentage plays. And as the percentage play, that was what I was looking for. You're still in a downtrend now unless you get back up over this 825.40 level. And if you did that without taking out 778.60, you could argue higher lows, higher highs, ideally over the 18-day average, you get an all-out buy signal. You're not there. In the Palladium market, up $60 for the week. Now, you got to keep your eye on the daily chart because it lost quite a bit of ground today. Where's the market fighting? Well, if we look, you finished at 1336.10. You're over the upper Bollinger Band, but this has been a market that gets over it, right back under it. It's just a solid bull market because as we get into further skirmish talks with Russia, you've got to worry about the palladium supply. They're one of the world's major exporters. In the dollar index, this whole rally just carried you on a weekly basis back to the resistance of that line in the sand. The 18-week average, you're still in an overall bearish trend, lower highs, lower lows. Obviously, an up week, especially with today's action, it really contributed because traders started saying, if China's back in the deal, the Fed can raise interest rates again, blah, blah. First of all, there is no deal. There's talks of a deal. As I said earlier, I put out a morning subscriber video. I think it's probably the most important thing I do on a daily basis and maybe the most important thing I do, period. Why? This is how the charts would look to you. And it's more than what I show here. We're talking window envelopes, other moving averages, all the other little nuances that I talk about. And in that video, I'm not in it. I've got a whole studio where I sit there and record, and I review 40 charts in a very certain order. So if you don't want to watch the whole morning video, you have a cup of coffee, you get to the part on the video where it's at, because I always record in a certain way. And I cover in this order, be it stock indices, currencies, the interest rates, the meats, the grains, everything through here. And the idea there is if you want to move somewhere quickly on it, you can, to get to the area where the markets that you want covered are in fact covered. So what's my offer with this? Well, it's really simple. The offering is that I'm going to give you the chart action. I'm going to tell you what I think the active traders are doing, technicals and fundamentals, and I offer you specific trade ideas. Yes, day trade, position trade. I'm going to throw a lot out at you. What do you have to do to get this video? Well, here's the simple part. For the first 30 days, it's $7.95. So it's not month to month. It's every 30 days. You can stop your subscription when you want. After the introductory price, $15. And I might even lower that. I'm debating about it. I just started this today, and we're buried with people that want it. So if you'd like to take advantage, how do you do it? Well, one of the things is you give us a phone call. You can do that. Over the weekend, we're not going to be here, but you can leave your name and number. We'll call you back. You can also go to our website at www.iraepstein.com, and under the word education or products, you will see this. Just click on morning subscriber video. It'll show you how you subscribe. Scroll down the page. You'll read about everything that I'm doing there, and away you go. We'll have you set up right away, and you get them. Remember, we're not open on Monday. I'll see everybody again Tuesday, Martin Luther King Day. Have a great weekend.